Final 2 hours of what has been yet another week of gains for the benchmark indices. You're watching Midcap Radar. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me is Vamakshi Dhoria. Vamakshi, good afternoon. We are half an hour behind schedule on the show. But, well, you know, we're down in today's trade. We're still holding on to 24,900. But we'll end the week with gains. And that's, I guess, the bigger takeaway for the bulls.
Well, absolutely, Hormuz. You know, like you were just mentioning a while ago, you've checked out for the week mentally, but I think the bulls have also checked out for the week mentally, at least for now. The Nifty is in the red, but the mid-cap end of the market is actually holding out quite well. So we've got a lot lined up on the show, and we'll take you through all of that. But let's get started with the top headlines. Frontline stocks pull indices lower as SEBI's move to extend the tenure of derivative contracts casts a shadow amid already prevailing global geopolitical uncertainty. Mid-caps perform better. Pharma and healthcare eke out some gains, but financials, FMCG and metals drag.
Smaller defense names like Apollo Micro, Idea Forge, DCX Systems are seeing strong gains. Apollo Micro Systems has hit a record high. Idea Forge has seen a biggest intraday advance since the 9th of May. DCX has reported its biggest single-day gain also since the month of May.
Dixon Tech gains after Motilal Oswal maintains a buy rating on the stock with a target of 22,300 rupees, says they continue to remain positive owing to Dixon's market leadership positioning.
Nazara continues to remain under pressure. It just mentioned that its associate company has suspended its online money gaming operations, the real money gaming operations, and they will evaluate the future course of action following the enactment of the bill. The stock is set for its worst week since listing.
Shares of R Systems International gain over 10% after the company says it has entered into a definitive agreement to acquire Novigo Solutions. Well, after 6 consecutive days of gains, the market has slipped into the red today. For now, the Nifty has broken below the crucial psychological mark of 25,000. The Nifty is actually being dragged down by some of these heavyweight financials. Take a look at HDFC Bank. That has also slipped lower in trade today. Focusing on the mid-cap index, then it is relatively performing better as compared to the benchmark indices. The mid-cap index is largely flat. It has only very recently slipped into the red, and the advanced decline ratio does reflect that because the declines are far outnumbering the advances, unlike what we've seen before. But let's move on to our special segment then, mid-cap movers. Hormuz is across the wall, and he will take us through the mid-caps that are moving around in trade. Hormuz, over to you.
Well, the broader market moves are the ones that are being spoken about, at least all through this week. But we'll start off with the gainers then, in the broader end of the spectrum, even though the advanced decline is slightly adverse. So Gulak Godavari Power is up 6%. Z Entertainment at one point was up 5.5%. With JM Financial, too, seeing healthy gains in today's session. We just highlighted a lot of these smaller defense names in our headlines, and they are the ones that are seeing double-digit gains today. Apollo Micro, well, almost last check there were 6 crore volume shares that were already traded in the first 3 hours of the trading session. So moves on very strong volumes on these smaller defense companies. A lot of the newsmakers excuse me, apart from them, that Foseco India just announced an acquisition. In fact, the stock before the acquisition was announced was already up 25% in the last 4 sessions. Centrum Capital has given up some of those gains from earlier in the day, and R Systems, as we just highlighted, on the back of an acquisition too, up 9%. Stocks that are doing well on the volumes front, and NetWeb Technologies is one of them, and Dhani Services, both of them seeing gains of 8% each on very strong volumes. And there is a certain pocket that is doing well today, and these are some of the names that are going to be exiting the FNO segment from next week, and they include the likes of Aditya Birla Fashion, Poonawalla FinCorp, and SJVN. SJVN, of course, is on the back of some news flow as well, but these 3 names, along with a host of others, will be exiting the FNO space from next week, and they too are seeing healthy gains in today's trading session, Vamakshi.
Well, thank you so much for that comprehensive list, Hormuz. But it's a good time to welcome in Hemen Kapadia from DR Choksi FinServ for a technical check on the market. Good afternoon to you, Hemen. This is Vamakshi joining in. What's your take on the markets now? Where do you think we're headed? Where the markets have cooled off today. Can we see some further cool down, or will the markets recover from this?
Very good afternoon to you. Thank you for having me. Sorry, it's a pleasure. I think it's simple, man. 800-point move. We were overbought, we were stretched, we were tired. So we walked into a small correction. And frankly speaking, the VIX is still not about 12. So I don't think it's got anything to do with that, your profit booking. And there's a big gap on the daily chart if you see a few trading sessions back. It's not a thumb rule, but normally such big gaps do not remain uncovered for too long. So I think that is what is happening currently. And yeah, coming back to your main question, I think 24, 892 is a support level, and we seem to be gravitating towards it. So as of now, 24,900 is working. We are looking at a small intraday bounce. I believe the lows of today could be tested again today or maybe even on Monday. So I believe some more downside is still left. And frankly speaking, the bank Nifty isn't helping the Nifty scores also.
Hemant, good afternoon. It's been a while. And what are the specific stocks then you're tracking? Since you mentioned we are tired. Yes, we all are since it's a Friday. What are the stocks that are on your list?
Hormaz, it's been a long time too. I agree. Yes, I wish they would have shifted next Wednesday holiday to today, so we have a long weekend. That's wishful thinking. Yes, I think banks, as I just mentioned, seem a bit wobbly. Even HDFC Bank looks a bit overbought. So I have a sell call on RBL Bank at around 255, stop loss 265, target 235. We've been moving sideways over here for the last 6.5 weeks. The daily mechanical indicators have signaled a sell. It seems like a distribution, but yes, a close below 250 is slightly important, but I believe it's on the way to do that. So if this distribution goes through, which it looks like in terms of a formation, I believe for the next couple of weeks, it's going to remain under pressure, not go down one way, but it's going to decline. And the other stock that I have is it's a buy on Bajaj Auto. The auto index gave an upward breakout after 12 or 13 weeks of a sideways movement. Okay, the big daddy was Maruti, but Bajaj Auto and Tata Motors are playing catch up. So buy on Bajaj Auto. It's a conditional buy. One can buy at 8650, stop loss 8450, target of 9050, strong support at 8600, a gap which hasn't been covered up, which is a good sign. The oscillators have turned positive given crossover buys not only in the daily, even on the weekly. Higher top, higher bottom on the daily chart. We're looking on the cusp of an intermediate uptrend. So a buy call on Bajaj Auto. Almost.
I look at the recovery in Bajaj Auto after that news break from Parikshit with regards to the resumption of the production of Chetak. But Hemant, before we let you go, a lot of these smaller defense names that have been springing up today on the list of gainers, the double-digit gains in Apollo Micro, Idea Forge, and DCX Systems as well. Of course, Idea Forge has been a big wealth destroyer, but any of them that look good to you on the charts, or do you just see that, okay, it's a one-off bounce and then, well, it just fizzles out?
Frankly speaking, right now it seems more than a one-off bounce. But see, like you said, Idea Forge is a wealth destroyer. Now, if you look at DCX, it's come up from 360 to 240 in three months flat. So as of now, it's looking like a recovery, not a one-off bounce, but a recovery, not a rally. For this to convert into a rally, the positive that we have seen today, price, volume, action, both, needs to translate on the weekly charts, which could take some more time. So as of now, they've fallen off a cliff. Some of them are recovering. Some of them have entered short-term uptrend. Some of them are oversold, bouncing back. So it's all over the place. But yes, this thing is not going to fizzle out in a day or two. I believe unless the markets misfire majorly, this could last for a couple of weeks. But as of now, it's a recovery, not a rally almost.
Pleasure having you as always, Hemant. Thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. Take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Here's CNBC TV18's all-new app, which gets you breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen shortly. Take a short break. It's still down 130 on the Nifty. That's the QR code that's on your screen. You can use that to download the app. We'll be back on the other side. Stay tuned.
Welcome back. You're watching Midcap Radar. Let's focus in on AU Small Finance Bank because that stock has taken a hit. In the last couple of minutes, the stock is off almost 2% from the day's highest point, trading close to the day's lowest point, now down almost 1.19%. The other stock that has taken a knock is Metro Brands. It's off almost 2% again from the day's highest point. For now, Metro Brands is at 1,147. Again, that stock is tanking in trade. But onto a CNBC-TV18 exclusive then. Sources tell CNBC-TV18 the insurance regulator is considering a proposal to cap health insurance premiums at product as well as portfolio levels. My colleague Yash is joining in with all the details. Yash?
Well, that's correct. What we've been given to understand from our sources is that the insurance regulator, IRDAI, is currently considering a proposal under which it could look at capping health insurance premium increase annually and otherwise at a portfolio level, that is the health insurance portfolio, as well as individual policy or product level. What we've been given to understand from our sources is that at the portfolio level, which is at the health insurance book level, the regulator currently is considering benchmarking the annual premium increase which insurance companies take to medical inflation. Of course, there would be a threshold which is being considered at a product or a policy level as well. What we've been given to understand other than that is that there could be a consultation paper on this particular proposal, which is capping how much hike can insurance companies take in a year on health insurance premium very, very soon. Of course, we know that the new IRDAI chairperson is scheduled to take over on 1st of September, and once that happens, then this proposal will be put before the board and a consultation paper could come out on the same thing. What is the rationale behind introducing this thing or considering this particular proposal? Three important things. Now, health insurance policies, the regulators come across multiple instances where new policies are being introduced at a much lower premium, and once the time of renewal comes, the premiums are being hiked significantly. What that does is that the policyholder, after taking a policy, getting lured by the low premiums, surrenders the earlier policy which he has and then has no other option but to pay higher premiums at the time of renewal. Second is insurers looking to offset inability to hike premiums for senior citizens with bigger hikes for younger classes. Of course, the regulator had asked insurance companies to not take more than 10% of premium increase for senior citizens. There have been instances where the insurance companies are looking to hike premiums for younger classes to offset that particular inability. And the third one is lack of insurers' focus on reducing expenses for operational efficiency and depending on premium hikes for the same thing. Just to look at some quick numbers in terms of how much health insurance premium contributes, it is 40% of the total premiums collected by the general insurance industry. This is data as of FY25. For ICICI Lombard, it's 30%. New India Assurance, it's 50%. Go Digit General Insurance, it's about 14%.
Yash, interesting insights there. Thank you so much for that update. The other, well, you spoke about the smaller defense names that are surging in today's session, but the one that is not doing well among the larger players is Mazagon Dock. And that is because despite the near 30% correction that the stock has already seen from its record highs, which is around 37.70, the note from JP Morgan is predicting further downside. Ria is here with more on this. Ria, what does JP Morgan have to say?
Well, yes, Hormuz, JP Morgan has an underweight rating on Mazagon Dock. They have a target price of rupees 2,468. What they've said is that the risk-reward ratio for Mazagon Dock still remains adverse despite the recent stock correction that we've seen. Over the last 2 quarters, the results for the company were quite weak, and this was largely due to provisioning-related cost overruns. But apart from that, and more importantly, the large order award for the P-75 Scorpion submarines is yet to materialize and has been delayed versus the guidance that the company has been giving. And if these awards get delayed further, it would pose a risk to the FY28 revenue estimates of the company, given that it takes about 2 years for revenue to start being recognized after these orders actually flow through to the company. Now, as of now, there also appears to be very little incremental positive news flow on the P-75I submarine awards for the 6 units of these submarines. So that is also a big overhang on the stock. And as of now, the stock is taking a hit of about 1.5%. And from its peak in May of this year, the stock is still down around 27%.
Well, thank you so much for that, Ria. Mazagon Dock's reeling under pressure after the thumbs down that came in from JP Morgan, the target of 2,468. But let's dip into a very short break then. We'll get you more news and updates on the other side.
Welcome back. A stock that has been doing well today is R Systems after the acquisition that it announced. Winnie is here to tell us more on this, and she's been tracking the stock all day. Winnie.
Hi, yes, Pharma. So we have R Systems that's in focus, and obviously the promoter is Blackstone Group, which holds 51% stake. Now, R Systems has acquired Novigo Solutions for 400 crore rupees cash consideration, plus stock-linked EBITDA performance is what will come in for the company as and when that EBITDA achievement actually comes into play. Now, the acquisition is going to help R Systems in expanding their offerings in Middle East, where currently they don't have any significant stake, right? Now, Novigo has around 45% of the business that comes in from the Middle East side. So this will be a big move in the Middle East front, as well as this will help them deliver their presence in Bangalore as well as tier 2 cities. The acquisition is EPS accretive for R Systems, and that's going to be from the first year itself. Novigo, in terms of numbers for FY25, the revenue was at 264 crores, EBITDA margins at 25%, while CAGR growth of around 44% over the last 3 years is what we've seen coming in for R Systems. R Systems, when you look at their Novigo, I beg your pardon. Now, R Systems, when you look at their numbers for June quarter, the EBITDA margin came in at 17.3%. Revenues were at around 462 crores. So this will add to their revenues by around 15%, as well as in terms of margins that will be leading to an improvement and accretive for the margin front as well. And all the acquisitions in the past, when you look at it, specifically after coming in, Blackstone coming in as well, they have been a margin accretive for the company. So this is a positive sign that the street is taking it as that, we'll see a good growth, diversification on the geography front, as well as newer sections of IT is what they're focusing on.
Well, thank you so much for that, Winnie. Take a look at the flashes at the bottom of your screen. Ashoka Buildcon has received an LOA worth 500 crores for a Northwestern Railway Jaipur project. The stock is up almost 1.2%. Sharp spike there coming in after this announcement for Ashoka Buildcon. But apart from that, take a look at the mid-cap index as well, because that too has now recovered, is now in the green, up almost 0.1%. It is up almost 68 points for the mid-cap index. But, moving on then, expect 9% Nifty earnings growth for FY26. That's the word from Sanjeev Prasad, MD and co-head at Kotak Institutional Equities. He is positive on Tier 1 private banks, domestic pharma companies, diagnostics and hospitals. Let's listen in.
We are about 9% now, 9.5% to be precise. But the quality of earnings growth in FY 2026 is not great. I'm talking about Nifty 50 index. The nature of the incremental earning growth is not a very good quality. It's not as if we are seeing some big recovery in the economy which is resulting in just 10% earning growth. Hopefully that will play out in 2027, but that remains to be seen. As of now, the growth trajectory for the broader economy itself is looking a bit challenged, I would say. Initiation of 3 companies in the BPO space, actually. So it's got nothing to do with specifically with agility. So we have 3 company initiations: agility with the buy, first source with the reduce, and Eclipse with reduce. Yeah. A few banks, the Tier 1 private banks, couple of Tier 2 private banks, some of the domestic pharmaceutical companies and healthcare services companies, which are hospitals and diagnostics. A couple of names in capital goods, but that's about it. That's been our model portfolio anyway for the last 12 months or so. Starting with the income tax cut, which was announced in the budget. You had then the RBI cutting policy rates by 100 basis points, and now you have a more action in the form of GST rate rationalization. So hopefully all these things result, some pickup in consumption demand. The bottom of the pyramid consumption has been really struggling given income challenges over there, and the fact that affordability has been a big issue. Prices have gone up a lot across the board. Market has a slightly different take on this. The market seems to be assuming that most of the cuts in the GST rates, whether it is 28% items moving to 18% or 20% items moving to 5%. Most of them will retained by the companies, which will result in a big increase in the profitability and profits, which of course means that you may not have that much of volume.
Sanjeev Prasad of Kotak. With that, we take your leave on this edition of Midcap Radar and for this week on Midcap Radar. On the other side, an exclusive conversation with Rajiv Bajaj of Bajaj Auto. Stay tuned. We'll be right back.